Hello everyone, how are you? I hope you're having a great week so far. As probably not very many people outside of Canada know, the Bank of Canada yesterday dropped their overnight lending rate by a quarter point. So the prime rate is now down to 4.70%. However, when I look at international news, nobody's talking about the Bank of Canada. Everybody is talking about the Federal Reserve that also dropped their rates. So that's really interesting news because, on the one hand, when we think about rates coming down, that sounds really great. However, what we have to remember is why are rates coming down? And that's because the economy is not doing so great. Core inflation is still over 3%, and somehow I think that's becoming the new normal, that they think that they can just drop rates like that. However, when I think about rates coming down, I keep wondering for how long. I think about that because the federal government doesn't have a budget yet. Last year, we were over budget already, and we saw how inflation went up. The government has been parading across Canada, offering all kinds of money everywhere. And so the direct link to inflation is money printing. And because Canada is going to go into debt, that means that we're printing money. So this means inflation is going to go up. The last time inflation went up after, 2020, 2021, all that cerveza stuff that they talk about, we saw rates go up. So even though rates are coming down, my question to everybody is for how long? And if budget is going to come out in November, what's that impact going to be? We're already in the middle of September. November is not that far away. So I'm just kind of wondering, what do these rates really mean? There's a lot of exodus when I look at a bigger picture as far as Canada is concerned, outside of rates. There's a lot of money that's leaving Canada. There's a lot of people that are losing their jobs. So is qualifying going to be easier? There's a lot of debt that's going on. A lot of people think that, now that my mortgage is coming up for maturity, I'll just, roll in that $80,000 of debt that I have. And when you're trying to qualify for your mortgage and your debt at a higher rate, plus the stress test, a lot of people are finding themselves not able to qualify and being like, what? What do you mean? So a little bit of surprises that have been coming up. This is what I've been noticing in some of, some people don't want to talk about what's really happening in the market, but like I always say, I like to keep things real. So if you are renewing your mortgage and you think that instead of just a renewal, you might want to incorporate your debt, that is no longer a renewal. That is a refinance, which means you have to now qualify for that mortgage. So if you have that coming up within the next 12 months, I strongly suggest that you start looking at that refinance now, so that if there are any issues that are going to be coming up, you have at least 8 or 9 months to prepare yourself properly. These are the strategies that I like to put in place. And so, talking for 3-4 minutes, I'm not going to solve the world's problems here on this video. So I like to customize it one person at a time. So my name is Michelle Brienza. I've been in this business again for 28 years and counting. I've personally bought, sold, rented, done construction. I understand what it is that you want to do and how you want to build wealth through real estate. That's my commitment to you as well. So please just give me a call, reach out to me. Or if you know somebody who needs some help and is struggling a little bit, please let me know. I'd be more than happy to help out. Okay, if you've made it this far into the video, thank you so much for watching, supporting. If you're watching this on YouTube, you can like and subscribe, and because I do this every week. Have yourselves a great day, and until next week, be well.